The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, 877-927-6648. And thank you to those subscribers who were able to attend last night's webinar. I really enjoyed it. I think I covered almost everything that I wanted to do. Only one thing I left out, I especially left it out because I always deal with it in a separate way, and that was the SMHs, the semiconductor index. I needed to see without any preconceptions how the chart formation unfolds between last night and Friday, and then perhaps over the weekend I'll spend a little more time just on the SMHs because they are a key ingredient to this whole thing. Semiconductors are in every walk of life there. Automobiles, just you name it. You need chips, and so I will deal with that. But otherwise, I think I covered pretty much everything. Now, there's one thing that I want to look at here. You remember last night when I said I wanted to call the webinar the No Rush webinar because I think there's an opportunity in certain areas that if you have a little patience, you're going to get the prices you want. I don't think you need to chase. Maybe there are a couple of things that you need to chase, issues that you want to chase. But overall, look, you saw what happened this morning. The Dow was up 170, and the next thing it was down almost 100. In no time, what was it again? Let me just check again. Well, there was a news. I never remember these news things. No, I can't remember where it was. I'll try to find it. Something about Russia there. Russia's Rosneft has notified buyers of oil products that future tender contracts will be in euros, not dollars, as early as this year. Some sources have revealed. So, things happen. So the market took a dive, but it is just part and parcel of what we're looking at here. So you see what I'm looking at. Remember, I drew these patterns last night. I showed in my webinar, and there really is time. As I say, this is a no rush webinar. I wanted to cover the positions we have. Still, all of them are up, and our short is still short. I don't think there's a rush to get in. If you're selective in what you want to buy, ideally, just find a price, have patience, let that price come in. Okay, so Overstock, just added a little S&P in the den, said Overstock CEO resigns, and I looked at OSTK and I said, somebody hasn't told the stock yet because it's still up 5 cents at 1955. And then I had a closer look and I said, oh, I know what it is. The CEO must have seen that in the daily chart. There was a doji peak F made at the 26 area, 26.46, not the all-time high, but still, it's dropped from 26 down to the 15s, and let's see where it opens at 12:30. Someone reminds me of 12:30, but check, you know what, I'll just put it here. I'll see it when it comes up. OSTK, it's just on the side there, off screen. Okay, here we go. So the Dow, remember the pattern that we look at? We always look at the lowercase h, I call it the dreaded H. If it holds nicely, it's not a dreaded H, it's actually a positive. It can rally. If it doesn't break the left side low, it can go above the arch high. If it takes out the left side low but closes above it, it says it can bounce, but it'll probably bounce to the next peak on the left or a moving average on the left that's important and then pull back and retest. If it closes underneath it, and within 2 bars does not go above the low that was made, in this case, the low of 25,440 would be the one that we're looking at. If it cannot go above that, you could be critical. You could call it 25,339, call it this lowest low that was made on the 15th of August. If it holds underneath that area, that says, you know what, you can just bounce, but you're going to have to do a lot of work before you get going with a major buy signal to buy mode. That's a pattern. Lowercase h goes to a lowercase m. All right, look at the weekly chart. Weekly chart is breaking, is holding right now. It has broken this this uptrend line that started at 21,712 December of 2018 to the low of 24,701. That was June the 3rd. That's where we actually went long that position after being short in April, and ran all the way up to the most recent high of the 16th of July, 27,398. We were fortunate enough to be able to short 7 points from all-time high, taken off quite a lot of profits, and now we're just holding a small position because I think there's still going to be a lot of testing of the 25,400, 25,000 area over the coming weeks. I could be wrong, but that's the way I'm looking at it. And that monthly chart is still looking pretty good. Let me just quickly do this, SPX.X. I just want to show you something in the S&P. S&P did not take out the 2941, was it? 2943.31 high of the 13th of August. Still time to do that today, but the high of 2939.08 is the high so far today. So the weekly chart it's broken key trend line support, but it keeps closing above it. That's important. It's getting narrower and narrower. It's like the apex is forming this massive gray line, green gray line. Here, this thick line, that's the key resistance from a long time ago. And you can see the same thing replicated in the monthly chart. Let me just mention this. I'll mention it as often as I can, just because some people don't necessarily listen to all the shows, and all through the shows they listen to what they can. That 9-month consolidation from January 2018 in the Dow, all-time high, to the low of 22,344. That was in April. Remember, the other indices didn't make an April low. They held in that H pattern. They held the left side low of February, January or February. The Dow didn't. It took out that by a little bit, and then it ran all the way up to a new high. In 9 months, it went from January high to a low to the October high of 26,951. Smashed to the 21,712. That was a very sharp decline in December. Overbought, but also Fed-related. And 9 months later, from the high of October, it made the high of 27,398, July of this year. And I've considered that August should see a red candle of sorts, and that it might take until September before we can get back on the road up again. We'll see. There's a lot of stuff going on. As far as the QQQ is concerned, let's put the QQQ into context. It's trading down 94 cents at 187.69. That weekly chart is okay. The technicals are somewhat weak, and the price would surprise if you were just looking at the technicals and say, hey, it's held quite well, and the monthly is holding quite well. But I have to put it together, and I didn't do that last night. I'm trying to separate stuff I've done before with stuff that was already related directly to our positions and what I'm kind of looking at in the bigger picture. In this case, we've gone to a leg B, a leg C. This is a leg C in the XLK. It's holding very nicely, but this is the issue. That weekly chart is only at a peak C at 82.78. The XLK is the S&P Select Tech Spider Fund, trading at 79.61, down 39 cents. All-time high, 82.78 in July of this year. Plummets down to 75. I'd say plummets, drops sharply. It's dropped sharper before. The April decline was deeper. It forms an Chapman Wave inside track propellant support line. It's held it. It's balanced above it. Weekly chart is not too bad. And now what I'm looking at is what happens to the XLK, because it's so important to go with the SMHs, semiconductor index. Can it get to the 8150 level next week, or will it have to test the 78.5 area? To me, that's 1 point up, 1 point down. Let's say that's going to be a very important test of strength. I'll be back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So we're looking at the SMHs, which is the semiconductor ETF. It is it really represents the stocks index, and at 123.56 in July of this year, it makes a top, peak F top in the Chapman wave and comes down very sharply. It comes down to the 106s, has a nice bounce. We were short a position. We didn't have the 2 or 3 times short. We were just short the SMHs, and we took nice profits on the way down. And should have switched right at the bottom because we got out just about at the bottom. But I thought it would just be a bounce to come and do a retest, which it did. But then it broke out. And that breakout was, I think it was the news from, was that NVIDIA? Yeah, I think NVIDIA, and had a big spike up on the 16th. And it's rallied in a peak D to a high that was made on the 19th of 115.17. Pulls back once, has a little doji candle. Had a call yesterday. We were looking at the SMHs, and the suggestion was that, yeah, you could start a short right here, but I'd probably wait just a little bit after the Fed, and then if it's starting to move down, I would have the short position. But I said you cannot think of it as, oh, this is the big move that goes down to the bottom of the 106s, because I still see some residual strength, and because of that, there was a move down, and it hit 113.27, a high today of 115.09. Would that have taken you out? No, I think they would have still kept you. Yeah, that would have kept you in the trade. And right now, if you're still in the trade, 114.53, I'd still, for another day, I'd give it the same range of a stop, just a tight stop. I wouldn't mess around. And it was the stop was just, I think, 20 cents above the high. 115.17, I can't remember offhand. I think I said a little bit above that high. Just give it a little room. So I'd still say give it a little room, but I'm still not thinking that this is the move that comes down much deeper. Maybe it's next week. Maybe we rally into the Jackson Hole meeting coming up. It started today, or starting today. You know, what comes out of these things? These are just a bunch of economists and folks that are throwing out theories, seeing if it's going to stick, etc. Brilliant people, but are they really marketeers? Maybe a couple of them are, but the people that are in the market right now who really understand the activity and the flow of money as news events and other aspects that impact prices keep just being thrown at you all day. The people who manage money in that regard, I think, have a better sense than an academic. So I don't, go Bretton Woods. You can go back to any one of these big meetups where they want to decide something, and about no more than 2, maybe 3 years later, the exact thing that they were promulgating, peace in the world, or no oil, consensus to make some kind of a monopoly. No this, no that. Just a little while later, it's like that is the bottom of that particular thing, and now it's going to start to flourish. So I just hope whatever they decide, the market is just going to take it in stride and say, okay, let's just move on. In the meantime, so the SMHs, if they do break over the next week, if you see this trade even intraday in the 116.18 to 117.30 area, I'm just going to say maybe this consolidation has more legs than I thought, more energy, and maybe we'll go a little higher. But at the same time, the way I'm looking at it, unless the SMHs close under 112.20 to 111.70, close, and in this case, it has to be a close for 2 consecutive days, not once, and then it bounces, then it goes. I want 2 consecutive days down, so you start to get momentum in the arch formation to the downside. I think it's just stuck right now. So that's kind of my opinion. The SMHs, a couple of things that I did want to talk about is EEM. I always get calls about EEM or questions about it. EEM is the Emerging Markets Index. I don't see anything yet, and I'm not sure we're going to see anything other than a catch-up play when the market, the general market, the American markets start to really move strongly to the upside, then it will follow. I don't see it as a leader at all in this particular phase. So what is the question here? OHI. Oh, OHI? Have I ever looked at the OHI? This is the Omega Healthcare Investors, Inc. Is this an ETF of sorts? Omega Healthcare Investors, Inc. Or is this a company that invests in healthcare? A nice move. Good eye. It's trading at 39.89. It's in leg C to the upside in the daily. There's this beautiful pattern that I love to talk about, and I love to do some technical work on. Look at this. This is not Technical Friday. That'll be tomorrow. And as it stands right now, we'll be doing the show at 8 a.m. tomorrow. And it'll be recorded and played again at noon. So look, this is an A, B, C in the weekly, but you have to consider whatever the letter is there could be an alternate wave count. The monthly chart, but the technicals are very good, and the monthly is an A, B, hasn't made a C yet. This is great. Oh, it's a REIT. I'm going to make a note of it because I went through some other REITs. I showed one today. So this is OHI. REIT. I'm putting it in so I can do a little more work on this. I say yes. I like it. It's in leg C, but I would not get the full position because it's really close to bumping into the resistance at 40.32. Let me just see. 40.30. That was a guess. Yeah, 40.30 the week of the 1st of May, 1st of February. So yes, you could start a position there, and at the same time, I'm going to say to you, keep it on your radar, because if it does a pullback after maybe it makes a D and it starts to get back to the 38.50 to 37.90 area, I'd even say 38.65 to the 37.90 area. Just remind me, give me a yell, because this is acting extremely well. What was the stock I featured this morning for my subscribers? Do you think I'm going to remember? I'll think of it because it was an incredible stock. It's done so well, and it was also a REIT. I forgot that. PSA. I didn't show it this morning. I was showing it elsewhere. PSA also, but yours is actually stronger in the sense that it's still early in its up move. Public Storage REIT, 260.9. I didn't show this for subscribers. This is something I did later on after I was done. Greg in Austin, Texas. How are you?
I'm well. How are you, Basil?
I'm well, thank you.
Good. Hey, I own a position in Fannie Mae, and I was thinking of closing it out at about 280 if I can make it there. It's got a lot of resistance in the weekly there, and so and then see what happens after 280. So I guess my question is, what do you think of that analysis? And if for some reason, there's more buyers, and what's it going to take to push through that? There's a lot of resistance on the weekly, though.
Okay, so I happened to see this go by this morning. I was at the health center. I saw FNMA go by, and I thought, oh my goodness, it's back in the running. Fannie Mae trading up 23 cents, almost 10% at 267. Good eye, Greg, and I'm going to talk about this when we get back because I think you're going to be surprised. I'll be right back, folks. Basil Chapman, Tiger Fish is on with Greg, Texas, looking at Fannie Mae FN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back on air. We're with Greg in Texas. He has Fannie Mae, bought it a little much lower down, and it's up very nicely at 268. It actually hit the day 274. Yesterday it closed in the 240 area. This is really good action. So this is what I need to say to you, that you have a plan. I don't want for you to change the plan because of what I'm saying, but what I am going to say is think of it this way. There's a rectangle formation that's formed in the weekly chart, and it's really between, I'll give you the exact price right now, It's the low just about $2 that was hit on the 29th, or was that the 1st? On the 31st at $2.02, that was the low. And it's trading up now very sharply. And the high that was made back in the week of the 24th of May is 327. So I don't know if you have enough, but I'm going to suggest you got in at what price?
214.
You see, I just don't see in this particular environment right at this moment. I don't know what's going to get it back to 214. I don't know why or how you got that. If you did technical analysis, it was on your radar and it just hit a level and you said, I've got to buy it. Whatever it is, congratulations, because you have a fabulous entry. And all I can say to you is that I don't see how you're going to get back in on a full position if you get out of the whole thing at 280 when the high of the threes to let's call it 330 is really a good possibility. So I don't think I want you to change your plan, but I would ask you to think about maybe modifying it a little bit. And that is, if you have enough, are you able to take some off at the 280 level? You just put it in. You just put a sell of X number at 280, and it's a done deal. It hits there. It's a done deal. But then what I would like to do is to have you assess the strength. If the stochastic has gone over 80% and it hits it, there's a chance based on the strength of the MACD that if price holds up, that stochastic could start to flatten out at about 83 to 85%. And at that point, you've got a stock that is really a nice entry point. So I'm going to say, if you have enough as a portfolio to think of this as a core position, but you're going to reward yourself for the planning and everything that you've done, that at 280 you will take something off. This is, I think that this is yes, it's risky, but it looks to me like this is something that on the next pullback, you might want to add back some of that position so that you start to learn how you start to use the house's money at some point. It looks to me to go, something terrible will have to go back to 240, actually to go back to 220. So I think you got in beautifully, but I'm going to also ask you something else. If you want, if it hits your 280, and you implement some kind of a plan, give me a call, and now let's look at it again. Why? Because the rectangle formation suggests that if it can trade like it has above the fulcrum, the baseline of $2.39, let's make it a round number, $2.40 for the last, since about February, was that February? No, since January, the week of the 25th. No, I'm going to say since almost all of January, a majority of the weeks it's traded well above the 200-period moving average of $2.34. And I think that it's wanting to hold in that area, that it was an aberration when it slipped below. It almost said, whoops, excuse me, that was a mistake. I want to go back. But I'm just now on a very short-term basis, the question you didn't ask me, what if now it doesn't go to 280, but instead it slips and it goes below 258, say? I would say to you, monitor it closely. I still don't with a move like this. I just want to see if there's volume. This is where I would look at volume. I think there was a 32 million climax on the 31st of July. Oh, yes. There. So I have a rule of thumb. I haven't had to use it for so long. The rule of thumb says if there's a volume climax, I have a term for it. It's called a climatic volume reversal, a low reversal. It says that if you can get back above the low price, in this case it's $2.02, there's a chance that for, I can't remember the exact number, I think it was 28 sessions, it shouldn't come back even close to that low. And if after 28 sessions, it is 50% above the most recent high and that low, there's a good chance it could go for 56 days or 56 bars above that. I don't know if that's going to work out, but I think there was a volume collapse right there with a price collapse, a volume explosion, And I think you've got the weight on your side, at least of the magnet of the whole area of $2.80 to $3 coming right there. So
right, you're talking about July 31st. This
yes, that was 32.
Okay,
that was huge. I'm just trying to run this through here. I just don't see a volume spike like that. I'd have to go to the weekly to find a volume spike. Yes, there was. There wasn't the big explosion to the upside. The week of January the 25th, there was 112 million to the upside.
Right. And that's why I purchased it back on August 5th. It's because the volume was so low, and you know there was still a pretty good percentage risk, you know, that it might take out that 202.
Yes, you didn't know, but you did it,
but I
and
figured it was worth it at that point because it makes such huge moves.
So Greg, look at the big candles. This is a learning experience here. Look, the 6th of August, huge move up. Then it got a little bit higher, it got repelled at the 200-period moving average. But look at the little rectangle pattern that I'm going to draw for you. And now, if you can have a look at the archives. So there's a rectangle pattern that goes on for 2 weeks. Hey, look what happened when it broke out. But look what happened in the weekly chart when it had the same thing. Rectangle goes from the very low of about $1 back in December of 2018, spirals up to that high of 3, I don't know what it is, 20 or something. Then it pulled back in the rectangle pattern, held it, and then it powered through it. I don't know if it's going to have the same thing, but patterns tend to repeat over and over. And you can see that there's a chance that if at any point in the next month, Fannie Mae, FNMA, is even trading close to the 287, 291 area, wow, it could really have a nice move, breaking the whole resistance area and then come back.
Okay.
So
sounds great. Thanks so much.
I hope it works out for you. Let me know how you're doing. And as I say, the area I'd just be a little careful of if it breaks under $2.58. Just give me a call. We'll deal with it. But that should be very good support in the shorter term.
Yeah, 258. I can hold out that long. I mean, I still have a pretty good percentage gain. So yeah,
fabulous.
I'll just wait and see what happens at the 280s and how it's trading.
And it's so funny that you'd call me because I haven't looked at it for months. And then I just saw it go by in the ticker. It was up this morning. I thought, back in business. Hey, have a great one. Thank you, Greg, and good luck.
I almost called you yesterday about it. So.
Oh, well, that was a nice day, too. Good trade. Thank you very much for calling. We'll be back, folks. Dow's up 28, S&P's down 9, down 6. I'll be right back. Basil Chapman back with you now.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV for the latest market information.
Hi, folks. Just for Greg, if you're still listening, Greg, Fannie Mae and my Chapman Wave automated resistance levels. There's nothing in the 120-minute chart. But in the daily, up at 283, there's a resistance going up to 299. So let's deal with it if we can get up there. Good eye. I think this is one of those situations where if you time it correctly, and this is what I've tried for my subscribers to my opening call. There are certain positions we've taken. I've tried my best to get them at outer points, either highs or lows. If it's a short, on the high, and on the downside, it would be. At a low, because that just, in a wild market, it just gives you so much cushion. You need, what is that? Beep, beep, beep. I don't know why it's beeping. Anyway, beep, beep. Everything seems to be working just fine. I'm not going to grumble about it, beep, beep. So that's all I wanted to say, that yes, I've got it there. Now, OSTK, this is Overstock Inc. I went futures. You've got your leg D in the 5 minute chart, C. The nice rebound, actually. The futures are still down 8. There's a leg C, a peak C in the 10-minute chart. Let me just go back to the chart. The reason why I spoke about that is I hit the wrong tab. There we go. OSTK is up $2.28 right now at 21.68. Wow. They obviously wanted to get rid of the Overstock CEO. They're happy as a claim. They're celebrating. The guy must feel wonderful that the stock jumps 10%, 11%, maybe 12% as we're talking on the news that he's about to resign. So interesting. I like this stock, but I found it very tough because once it starts to change, look at the down move that goes from the 23 area right down to 9 with a beautiful doji low at the bottom. I noticed this. I spoke about it for subscribers just 1 or 2 times, and then it got off my radar, and it ran all the way up to the 200-period moving average, then over it, and then way below it, and now it's having a nice bounce. So the monthly chart just looks terrible. This is a company that needs to do something right, because obviously they've done a lot of things wrong. IPO comes out, goes to 90. Has a little problem, goes to 9, I'd say a 90% pullback. Is a little bit of a pullback. Okay, so be careful with Overstock. Other thing I want to look at is, had a question about, what was that? Right here. Yes, I just want to do this quickly. I don't want to spend too much time on it. The XLF, having a nice session today. It's up nice. It's just a little bit of a bounce. 19 cents at 26.79. As I said last night in my webinar, and folks, if you get the webinar, it's there, it's up today, and you get a 30, you get my subscription to my newsletter, and it's a money-back guarantee, 30 days. Most importantly, this is the period we are trying to enter certain positions on the long side that have the potential to, if we can survive the next choppy 3 to 8 weeks or whatever it's going to be, to be in the next rally up. That means we might get taken out. It might have to do it again. But the only way you can really start is to try to get lows of significance to give you a bit of a cushion. That's really what I'm attempting to do, because I do believe in the next move. The next move should start to see an improvement in the financials. Will that mean that the XLF can break 27.50, then 28.30, and then go to a recovery high in the 29s? That's a long way to go. There's a lot to do before we can do that. I think this has to consolidate a little bit longer. Oops. And the next thing I wanted to talk about was the KRE. What was the question? Oh, just to give me the percentage. The KRE is the regional banks. This is the S&P Spider Regional Bank ETF, trading at 50.29. You know, it's been stuck in this range with slightly lower highs and lower lows ever since it spiked up to the 57s. Back in, I think that was about March, I think it was, and then it pulled back to the 49s, and it's just been trading in that range. If it takes out the low, if it closes, if the KRE trading at 50.28, up 21 cents, at any point in the next 3 weeks closes under 48, I have to consider that it could retest that December low. I'd love to be more positive on the back. I think the XLF in chart formation, as I said before, has rising highs and rising lows so far. So that to me is better. I think that the regionals are kind of stuck. There are other things going on. I think the XLF reflects a little bit better the overall the financials. Yes, KRE's ugly. So question about, not a question, it's a statement about sugar SB trading right now. Yes, it's a green candle. You know, I don't like to see these arch formations like dreaded H that takes out the left side low and then makes an even smaller one unless you start to have an inside bar. And this rectangle now could be really important for sugar. And if sugar at any point in the next, I don't want to give it too long, but I'm going to give it all of next week, Friday a week. If it manages to even get to 1180, that'll really improve the daily chart and help the weekly chart. But if it touches 1120, it doesn't even have to touch it and bounce. If it just touches it, it's making the upside very limited. So as a bounce, this is the area that you want to be looking at because the MACD is just about to cross positive, and the stochastic is better than it was before. It's at 21%, but I have to tell you, it's not a great chart formation at all at this particular moment. Next question I had was, what did I had a question overnight, and now can I? Oh yes. So the statement was that if I made a joke about the yields, about this crossover in the yields, I really don't understand it very well. Could be, I don't know. All I'm going to say to you is the TBT, right now, that's the inverted bonds. I believe it's getting close to some kind of a bounce. It's at 24.50. It made a low just at about 23 the other day. $1.50 up is about, what, 5%, 4%? But it's that monthly chart that says to me, if next week the TBT, that's the ultra short Lehman 20-year Treasury bond fund, if it can close not above 25.31, that was the high of last week, but into the body of the candle of the previous week, if it can get into the 25.40 and then close the week strongly, I think that the TLT is already telling us that some form of, at least some kind of a top is being made right here. And unless there's a close, not a spike, but a close sharply above 148.16 to the 149s, 148.60 was the high of 6 days ago. I think this is a peak, and a peak D in the weekly chart. I think we do have a bounce in the TBT coming. Let me squeeze this in. You'll see exactly what I'm talking about. Remember, I drew this in some time ago. 143.62 was the high of July of 2016. And then I drew the lowercase h that goes to a lowercase m. We saw the lowercase h, and then a big M-shaped formation, and finally went down to the low of 100 and, was that 112? I can't remember now. 111.90 the week of the 2nd of November of 2018. And then it spiraled up to the most recent high of 148.60 in leg D. and I had a Chapman wave price time, left side, right side, match not to the low, but to a particular candle that I always use. If there's a secondary, I have to use a secondary indicator. And then there was also this Chapman wave inside wedge target line, which said that the week of, right here, the week of the 16th of August, it should hit 143.62. It did that exactly. It went above it. I think there's a bit of a digestive phase coming up. And I'll be right back. Basil
I'm
Chapman.
certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge heard here at TFNN.com.
So tomorrow's Technical Friday. I had a question about GNRC, which is just looking for generators, doing fantastic, all-time high today at 75.87, up 1.22. We once had it for a brief period. You know, there's another one like waste management. Generators, you need these things. I don't know why we just didn't hold and just buy and hold. It's right there at all-time high. It looks fabulous. Yes, so I'll do that tomorrow. The question is, could it have a cup and handle, for a Chapman wave cup and ladle or cup and handle in the monthly chart? I'll do that. Remind me, I'll do it tomorrow morning. I'm going to be doing it early at 8 o'clock, so you got to be ready. So I got an email saying 219 interest rate like 1975, cost of servicing debt for emerging markets as a percentage of the GDP dropped to lowest level in decades, i.e. Spain. Yeah, you remember, if anybody remembers 1975, we went into that period of inflation. You had to go to the post office to see if the stamp was still worth what it was the day before. I don't like that. That is, inflation is not a great thing. You never know what prices are going to be. So, okay, couple of things as we're about to wrap up here. As I said, I'll do my show. My webinar last night, I felt comfortable that I covered everything that I needed to cover in it. You can see today we just had that exact thing. I said that we've got to wait for sharp pullbacks. They're going to occur, but there's still buying intensity here that needs to dissipate, and I think it'll dissipate over a couple of days, maybe going into early next week. Let's see what happens. There's this whole thing going on with all the economists yakety-yakketing. I don't know how that's going to affect the world, but we'll see what happens, what comes out of it, Jackson Hole. And meantime, back to the ranch, as I was saying, that if you look at the TLT, the action there says that the MACD is turning down the day, but it hasn't crossed negative. Stochastic's gone from over 80 to 74%. The price is pulled back a little bit under the 9-period moving average. Still very strong. It's going to take quite a while. It's going to take right up until Tuesday, Wednesday, if there's going to be a break. It's going to have to be a break, a sudden break into the 140.50 to the 139.50 area. So stay tuned. We've got a lot coming up. Of course, you've got Steve Rhodes coming up. You've got Dave White. You've got Tom O'Brien. This is Thursday. So I just wanted to do one other thing here to give you levels on the TBT, which is the inversion of the TLT, and it's trading at 24.51. It needs to close above 25.10. 25.03 is the black 14-period moving average right there on the left. And then I think we're going to see a little bit more of a bounce in yields. Thank you so much, everyone, for being here. Check out the archives if you want to go to the archives.